Wednesday, August 2021 meeting of the Norfolk County Commissioners into session. This meeting is being held under the rules of the executive order. On Thursday, March 12, 2020, Governor Charles Baker issued an order suspending certain provisions of the open meeting law. Mass General Law, Chapter 38, Section 20. That order was effective immediately and until it is rescinded or the state of emergency is terminated. On Wednesday, June 16th, 2021, by action of the legislature, the order was extended until April 1st, 2021. I'm going to call the roll. Commissioner Stady.
Present.
Commissioner Collins.
Present.
Commissioner Shea is present. We have a quorum. I'm going to ask everyone to stand and join us in saluting the flag.
I pledge
Allegiance to the flag
of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. By way of explanation, we have a full meeting today, a couple of guests, which we're happy to have. But we have 16 items on our agenda. Item number 14, if no one has an objection, I'd like to take out of order. That is the report from the Abrams Group. My intention is hopefully to let the Abrams Group open up and go to 2:30 at least, if not more. Stop at 2:30 and have a brief school board meeting because Director Little, Chairman Little will be here at 2:30, and then finish our portion of the meeting after that, so there's a lot of people on. No objection. So if hearing no objection, that's what we're going to do. We're going to take item number 14 out of order. And the team is here. We also are happy to see our new superintendent of schools, John Martin, with us. And welcome, John. I don't know if this is, I guess this is your first meeting in live.
It
We have listened before, so we have that ability to do both. So number 14 is the report of the Abrams Group. This is an update. We're excited. I think this is, I don't know, historic. That's probably a good word. We're gonna, this will be our first part of unveiling the Abrams report. So I'm gonna call on Mark and Matt, but I think Mark's gonna start. Yeah, good afternoon. We're gonna shuffle around a little if everyone can see.
I'm okay here, right?
Yeah, you want to see, I can spin.
Yeah.
No, move. I would think that's
Yep.
Good afternoon, Commissioners. Thank you for
Good
having us today. We're here to present our Phase 1 deliverables, which is really under the umbrella of financial management. It's going to include the financial forecast tool, the financial policies, the capital plan, and capital budget. So we're in the war room. I'm going to hand out to you, Commissioners, the Phase 1 report.
Thank you. Thank you. Thank you.
And with technology today, people on the screen zooming in can see the PowerPoint and Excels that we're going to show. In the war room, we're going to walk through the document. The document is a binder. It has 10 pieces to it. I'm just going to outline those pieces. One is the PowerPoint presentation that summarizes everything we're going to speak on today. Number 2 is the best practice review. It's an executive summary of what we're going to speak to you today. It includes a financial forecast. The financial forecast is a tool. It's an Excel-based tool to help the county with its budget and budget forecasting. We also have a handout for financial forecast assumptions, the summary, and the financial forecast budget template. We've been able to align the county's budget process with the financial forecast template. That's the first set of deliverables. The second set is the financial policies document. One of the management letter comments from the audit firms continually stated that the county does not have a set of financial policies. The county now has a set of financial policies. The document's about 38 pages long, and it contains 11 sections that we will be overviewing today. It is in draft. Once it's adopted by the county commissioners, it becomes final, but it's never final because it's continually updated year after year after year. The third section is capital planning and budgeting. You've seen many of the products before as the fiscal 22 capital budget has gone through its various formations, reviews, and adoption. But you haven't seen the tool. And the tool's a powerful tool that has 10 years worth of capital data and can print out any of those years, multiple year capabilities. But it really gives the county a 5-year capital improvement plan and an annual capital budget. That capital budget you've seen before. It's gone to the FinCom, it's gone to the advisory board, and the commissioners have formally approved the fiscal 22 capital plan. So that's 10 items that are contained in this booklet. I'm going to walk you through the PowerPoint, which is the second tab of the booklet. It is our best practices review, financial management, and operations analysis. It is our phase 1 deliverable on August 11, 2021. The objective of this study, going back to 2020, is to conduct a best practice review, financial management and operations analysis of the county, and to assist the county in establishing financial policies, budget forecasting, and a long-term capital improvement plan. The county wanted to address several issues in this study. One, a structural revenue and expenditure issue. Two, a concern that staffing levels may not be sustainable. Three, a plan to address the management letter comments. Four, the Norfolk Aggie contribution. And five, to develop a plan for greater efficiencies and effectiveness of county operations. So our scope was fivefold. One, a multi-year financial forecast. Two, the establishment of financial policies. Three, the operations and staffing analysis. Four, the capital plan and procedures. And five, a regional services review. So today we're presenting three of the five: the multi-year financial forecasting, the financial policies, and the capital planning processes and procedures. In September, later in September, we'll be presenting the operations and staffing analysis and the regional services review. Initially, we submitted in January the benchmarking analysis and a preliminary report on operations. And we also submitted in June a preliminary report on regional services. So today we're going to focus on the multi-year financial forecast, the financial policies, capital planning, and there is some overlap. So when we get into the financial policies, one of the sections is forecasting, one of the sections is capital. So we will be brief on those areas. So the first is the multi-year financial forecast. It's to assess the short and long-term sustainability of county revenues, expenditures, and how they relate to county operations. It's based on a comprehensive review of the revenues and expenditures, including those of the Norfolk County Agricultural High School. Our deliverable is a working model, an Excel-based tool that allows the county to complete annual forecasts and projections for 5 years. So you've got several things here. You've got a capital budget and you've got an operating budget. That's a one-year focus. The county approved the fiscal 22 operating budget and capital budget. The forecast builds on that and looks at a 5-year projection based on multiple assumptions. And we'll walk you through that. So the deliverable is an Excel-based tool, and Matt's going to show you some features of that. And it allows the county to make changes in assumptions for revenues and expenditures to show an updated forecast based on those assumptions. So the first set deals with expenditures, and it's by expenditure groupings for debt, group insurance, retirement, miscellaneous expenses, unpaid bills of prior year, Wollaston Recreational Facility, the Commissioner's Office, data processing, the Treasurer's Office, Registry of Deeds, maintenance, engineering, and the Aggie. That's on the expenditure side. On the revenue side, registry transaction fees, recreational receipts, court rentals, interest earnings, miscellaneous receipts, county tax assessment, et cetera, for the revenue line items that constitutes the revenue budget. So the multi-year forecast looks at revenues and looks at expenditures, and it's based on selection of a fiscal year in the tool. So you could select fiscal 20, fiscal 21, fiscal 22. It's built on multi-years of actual data. What was the budget for those fiscal years? What was the actual expenditures or revenues for those fiscal years? And it allows you to choose any fiscal year that you want to set the forecast. We've included fiscal 22 budget, obviously not actual because actual has not been completed. And we ran numbers based on those fiscal 22 budgets. In the past, part of the county's spending out of the operating budget included capital, groupings 5,500, 5,600, 5,700. But as we will discuss when we get to capital, capital is no longer considered part of the operating budget as of fiscal 22. So capital expenditures for these object codes are not included in the forecast. The forecast, therefore, becomes an operating budget forecast for revenues and expenditures. And again, we use fiscal 22 budget to do a dry run on the financial forecast for the new fiscal year. So with that, Matt's going to demo the financial forecast at a high level.
Just before we introduce Matt, I just want to mention that former Director Mike Mullen is on the call today. And Mike, of course, had so much to do with the inaugural finding of the Abrams Group and getting us started. So I just want to shout out to, and it's always good to see and get Mike's input. I'm not sure he's going to give us any input today, but I want to remember that if anything goes wrong with this report, it's Mike Mullen's fault. If everything goes positive, it's
There you go.
this board and John Cronin's.
Built-in fall guy.
So hello, Mike. I just wanted to say hello. Thank you, Mike.
Thank you, Chairman. Thank you, Commissioners. No, I'm excited as heck about this, and I really want to thank the Commissioners, the Abrahams Group, all of our departments in the advisory board, and the FinCom. I mean, in terms of really supporting, this whole project and where it's led. It's very exciting, and I think it'll make us much more sustainable as a county. So thank you.
Thank you, Mike. Matt.
Okay, County Commissioners, good afternoon. My name is Matt Abrahams. I'm with the Abrahams Group, here to talk to you today about the 2 Excel-based tools that we've produced for the county, one of which is the financial forecast and one of which is the capital plan file. At the moment, we are talking about the financial forecast tool. I do not have the ability to show it on the screen in front of you. Yes, however, we do have handouts that I'm going to point to as we walk through this right now. The people who are connected to the meeting online have the ability to see the file itself on the screen right now. So I will make sure that as I talk to you about the tool, I'm also showing them the tabs that we're talking about here. If I were able to show it on the screen, I would probably dive into a little bit more detail, but that's okay. We can keep it very high level and just talk to you about what we have here in the packet. So if you would, I'd like you to flip forward a few sections. We're going to come back to the PowerPoint that we're currently looking at right now. Please flip to the blue tab, just past the blue tab in your binder.
So tab 7. 7, maybe? Yeah, they're tabbed differently.
Oh, they're tabbed differently. So the one that So flip until you see an orange Excel looking file with lots of orange. It looks like this.
Okay, go to different tabs.
Right, okay.
Tabs.
Oh, different tab, yep.
Yeah.
There it is.
Yep.
So it's after number 4. Between 4 and 7. Got it on mine. Thank you, Dave. Yeah.
Okay, thank you. Just before, at least in my booklet, is a 3-page write-up on the financial forecast. So you have that for your review as well. If it follows the layout that I have, it would be in the tab before that. 3 pages worth of a write-up on the financial forecast tool and the process that was used to compile it, as well as its capabilities. However, I don't plan to speak really in detail about that. I just wanted to make you aware about it. We are now going to walk through the handouts that I have for you on the forecast. So that starts with the orange looking one. So I'll just talk real quickly before we get into this about the process to compile it and some of its capabilities. And then I'll show you the work products we have in front of us. So the financial forecast tool, as Mark described earlier, has a lot of data in it currently. We worked with county staff to compile actual expenditures, actual revenues, budgeted expenditures, and budgeted revenues for fiscal years FY16 through FY21. So that's, I believe, 6 full years worth of data. Because the FY22 budget was available as well, we also worked that in. So we have 6 years worth of actual and budgeted data, plus 1 year's worth of budgeted data for FY22 as well. There's a lot of data in there. The way that it's laid out on the detailed data tabs is consistent with reports that we received from the county out of the financial system. So it's important to recognize that, because when we moving forward, once the county is in possession of the tool and starts to use it, in order for it to be truly effective, it's going to need to be updated on a regular basis once a new fiscal year completes, for example. And at that point, it would make sense for someone to go in and populate the tab with the most recent data as well, so that data is available for future use. Then after that, what we did, we worked on how exactly are we going to project forward from there. We have lots of data we could use. How are we going to project forward from there? We came up with a list of assumptions, which I'm going to walk you through right now in a moment. Based on those assumptions, we are projecting forward a 5-year look currently. And that 5-year look can be any number of years. It could be FY23 through 27. In future years, it could be 24 through 28. It has the capability of shifting however the user wants to do it. Based on those assumptions, which also includes a fiscal year that Mark mentioned, which we're currently using as our basis, we project forward. So for example, if you want to use the last year of actuals, you could use FY21. And then based on the assumptions we're about to walk through, it would project forward based on FY21 actuals. You could also do it based on FY22 budget. That's your basis. You project forward from there. It has all of those capabilities. So the people in the meeting can see it now. We're going to walk through the assumptions tab, which is the one that has lots of orange in front of you. These are the assumptions we used in what we're calling the dry run that's in front of you. This was a run that we put together with county input and feedback. This was not a run that the county itself did, but we did it with the county's support. But this is a process that would be used to use the tool in a given year going forward. The first page that's in front of you has the first fiscal year in the financial forecast. That first box where it says FY23, you set that because that's going to be the first of the 5 years. It's up at the top, Commissioner Shea. The first of the 5 years in the look. Okay. Once you set that to 23, that's the first year. And then it's 24, 25, 26, 27 from there. If you set that to 24, that would be the first year, and then the 4 years subsequent to that. The next section are the revenues that we use for the projections. We put in orange anything that we believe is a configurable revenue. What that means is come a point in time where someone's going to do a new forecast, or maybe do one to replace the one we've done here, they would go through and set the revenues appropriately based on their understanding of what the revenues are. We also provided a comment, which really is kind of like trying to capture in history based on our thinking at the time when we did the setting. So it gives you a little context to what was behind the decisions that were made. The second page is the expenditure one. And as we mentioned a few moments ago, the first thing you would do would be, let's set the year that we're going to base expenditures on, which is at the top, FY22 in this case, and whether we're going to do a budget or actual. Because we have both sets of data. Not for 22, we don't, because 22 is not complete yet. But for other fiscal years, we have both actuals and budget available to us, and we have the ability to use either or. Okay. Then also below that are the different assumptions we use for the different expenditure groupings or line items. And in this case, we use percentages, not dollars. So based on the expenditures in that fiscal year that was selected, we project forward using those percentages that are seen in front of you. And also a comment again to document what we were thinking when we made those decisions.
But when we do projections, we are ultra conservative on revenues, and we are realistic, if you will, on expenditure percentage increases. So you'll see a lot of the revenues here relatively flat, with a few exceptions. Those exceptions are basically statutory driven.
Okay, so now I asked for you to flip to the next page, which in the top right says financial forecast summary. So this is our look at a summary level of what the revenues that we just projected based on the assumptions we talked about, what they look like over the 5-year period. The first page is revenues. It's going to look very consistent to what we just saw a moment ago, but this is presented on more of a report tab, as well as comments talk about what each revenue represents. Page 2 are the expenditures. So these are the projections based on the assumptions that we had talked about earlier. The first page is the county's general fund. And the second page is the Norfolk Aggie General Fund. And then down at the bottom is where the comparison takes place. Comparing your revenues to your expenditures. That's kind of the bottom line to take a look at as you're looking forward with the projections. This particular dry run is 23 through 27 based on the FY22 budget and the assumptions that are shown in the orange. And as Mark mentioned, the revenues are estimated to be conservative, but we are showing deficits in each of the 5 years. In this dry run is showing deficits on that bottom line.
So the tool is being turned over to the county. The county will then look at these assumptions and develop, as it starts its fiscal 23 budget process, this will parallel that process. And as we get into capital, the capital will parallel that process as well. And those flat revenue assumptions that I spoke of earlier will be adjusted. But this tool is going to help, particularly with the issue of the structural budget issues that the county has faced. Each year, the county looks at the revenues and expenditures and has roughly a $500,000 to $600,000 structural imbalance. This forecast is right on in terms of those numbers. So, first deliverable, financial forecast of revenues and expenditures based on A, actual data or budgeted data going back several years. And I want to acknowledge Joe Doria in Treasury, who helped us reconcile tons of data going back 5 or 6 years so we could develop the baseline that can be used going forward with this forecast. Again, budgeted revenues and expenditures and actual revenues and expenditures going back 5 years. So we believe it's a powerful tool that the county can use moving forward. And with the capital tool, can assist in facilitating budget preparations down the road.
Mr. Chairman, can I ask a question?
Certainly,
Just to clear up a little bit. So are you basically, in summary, taking your assumption, okay, for fiscal 23, including the Aggie school and the county, you're projecting a deficit of about 600,000? Am I reading that right?
Yes, that's correct.
That's what you're projecting.
Based on the assumptions that we have in here, yeah.
Understood.
Yes.
Understood. I mean, I had a couple of questions on the assumptions, but we can talk about that later. You know, in a friendly, not adversarial role, but because I noticed you didn't include any kind of unappropriated balance, no stabilization offset, you know,
Yeah,
things like
that
that.
is correct.
I failed to mention that, yes.
Right.
That's
And
correct.
then there was one other one I flagged, just really quick. I'm sure Peter will touch it in a minute. But it was about the court rentals, because you're projecting out 5 years. We might lose a court, we might not. So these are all assumptions. I
Yep.
get it. But I just want to make sure I'm reading it right. Based on what you're saying,
Yep.
that assumption is a deficit for us with the Yankee school and everybody altogether, 600,000.
Correct.
Okay, fine. I just want to make sure I'm understanding it. Good.
Yeah.
Okay. Not good that we're in the hole, but
Right.
good to understand.
Good that you
it.
understand.
Yeah. Okay,
Yep.
good.
Commissioner, if I could just add one remark. The mention by Mr. Abrahams that this is a tool.
Right.
Makes it an iterative tool. It is designed to allow for the changes that you just mentioned.
Right.
Commissioner stating, you're spot on. Things will change.
Right.
Inevitably, but what Matt's designed is a static view of how the tool can be used, knowing what we know today.
I get it.
And it is expected to be altered.
Correct.
You're right.
And it was a dry run that we put together.
Yeah, no, that's good. It's
It
helpful.
may look very different than if someone from the
Yeah.
county were to do it.
So you look at that and you
Yeah.
say, okay, now we know if we don't do something, we have to do from A, B, or C, or, you know, whatever. So, yeah, that's good.
Correct.
I just wanted to make sure I was reading it right.
You got it.
Okay, good. Thank you. Thank you.
So the second part of our deliverable
Um,
are the financial policies. And I'm going to go back to the PowerPoint slide 10 to begin that. And I'm also going to
Different chat.
I just pulled out the policy document itself,
That's a 7. right?
That's a 7. Yeah,
which is tab 7.
Yeah, I got it.
yeah, go ahead.
And I'm going to dual this. I'm going to highlight things off the PowerPoint, but refer to the actual policies document. So my suggestion would be to look at the document, tab 7.
Yeah.
Again, this is draft. We will expect the county commissioners to adopt this after you've reviewed this. And as I said, this will be an ongoing process to maintain and update the financial policy, similar to updating the assumptions in the forecast. So why do we have a set of financial policies? One, it's a management letter comment. We see year after year that the county had a lack of financial policies. But we also had other management letter comments that I will refer to as we go through the policy document. So the set of financial policies satisfies a major management letter comment, but other management letter comments have been addressed in the policies themselves. By developing these policies, the county has taken yet another step to strengthen its overall financial management. Such policies promote fiscal stability, establish a framework to establish and reinforce internal controls, and have the added benefit of boosting the county's credit rating. County's credit rating is capital A, small a2, which is kind of in the middle. They also are a key component along with the capital plan and long-range forecast. But essentially, the financial policies is really a communication tool to have a set that is commonly understood by everyone in Norfolk County. There are 11 sections. There's an introductory section, budgeting section, accounting and financial reporting, a section on financial reserves, capital improvement program and budget, debt management, financial forecasting, indirect costs, investments, grant management, and the last section is a vacation leave for non-bargain employees. So in the introductory section, the first word is communication. And I mentioned that before, I won't repeat it, but it's important to have a real understanding of a framework for internal controls and policies. The Government Finance Office Association, the acronym is GFOA, recommends that every government should document its accounting policies and procedures. This document codifies the policies. We're going to suggest the county develop the procedures and forms to help implement these policies. But one of the things you've asked us for throughout this project is best practices. And the Government Finance Office Association, which really is the association for state and local governments in the United States and Canada, has many of these best practices that we will be discussing. This is the first comprehensive set of financial policies. There are a number of firsts here. The first financial forecast, the first capital plan and budget. And I might add, to my knowledge, I may be wrong on this, the first operational review of a county in Massachusetts. So each section has an introductory and policy as the first two bullets in the document. So the second section is budgeting. So you'll see 2.1 and 2.2. One is the introduction and one is the policy. To me, the budget is the most widely read document of any government during the fiscal year. The GASB would like to think people read the financial statements, but to me, the budgets are the most widely reviewed document. So budgeting is important, and that's why it's really the first section here. Plus, the budget sets up everything for the fiscal year. The policy is the county commissioners and the advisory board shall follow the provisions of Chapter 35, Sections 28 and 28B for drafting, acting, adopting an annual operating budget. And some highlights of budgeting. 1, expenditures shall not exceed budgeted appropriations. 2, where available, one-time or non-recurring revenues that are not restricted be used for non-recurring commitments, such as additions to county reserves, mitigation of contingent liabilities, or supplementing capital costs and funding the capital budget. This is important because you don't want non-recurring revenues to fund recurring expenditures. The county should strive to attain a structural balance by fiscal 23. You mentioned that balance, Commissioner. So we've got fiscal 22. And to take our recommendations and begin to incorporate that into the fiscal 23 budget to strive to attain a structural balance by that point in time. And further, the county will strive to attain the GFOA Distinguished Budget Presentation Award for the county annual budget and the ASBO Award, Meritorious Budget Award, to recognize the best practice in budgeting over the next 3 years. When you see our operational report, you will see comments on the budgeting sections for both the Aggie and the county. It's basically an Excel-based document. The best practice is to achieve these award presentations. So there are mandatory requirements that we will highlight in our phase 2 report. And it would be nice if the county can prepare its budgets consistent with these guidelines over the next 3-year period. The third section is accounting and financial reporting. They are crucial functions of county government. Accurate and timely financial information is important to inform decisions. The policy is the county's accounting record shall present fairly with full disclosure the financial position and results of financial operations in conformity with generally accepted accounting principles, and shall demonstrate compliance with finance-related legal and accounting and contractual provisions. That's a lot of technical language. What it basically means is the county prepares a balance sheet which represents the assets, the liabilities, and the equity of county operations, plus an income statement called Results of Financial Operations to present the revenues and expenditures on an annual basis. And this needs to be done in accordance with standards. We have basis of accounting, reconciliations, year-end closing, transfers, year-end purchasing, year-end processing, financial reporting, and data retention as sections of the accounting policies. I want to highlight a couple on slide 17. And that is departments on 3.4.2. We're talking about debt reconciliation. And the county accountant will periodically reconcile the county's bonds payable and bonds authorized but unissued debt maintained by the treasurer to the general long-term debt account group. So there's 2 or 3 things here. One, there's a management letter comment discussing that the county is not tracking authorized but unissued debt. And this can be accommodated by creating what is called the general long-term debt account group. And that is a recommendation of ours. And once implemented, that management letter comment will go away. 3.7. Year-end purchasing. There was one management letter comment with 2 issues. One, that the county issues purchase orders without having a actual good or service delivered. And 2, many purchase orders do not get closed out. So we've developed 2 policies to address that. Departments may encumber estimated and known costs for goods or services that have been received as of June 30, for which an invoice has not been received. And any outstanding purchase order as of June 30 will be rescinded, if not liquidated, by August 31. That gives the county like 60, 61 days to finalize these purchase orders and to get the invoices in on those purchase orders. If an invoice is received after that date, one of two things happen. The county has a budgeted line item for prior year expenditures. And if that's not sufficient, you can go to the advisory board to approve that, that invoice. This was discussed with the Finance Committee in July 27th, I believe, and recommended that these policies have a couple of changes, one of which was addressed here, and recommended that it be sent to the advisory board for review and comment, which will be taken up at their September meeting. The second part is the county will strive to meet the requirements of GFOA's Award for Excellence in Financial Reporting, demonstrating the best practices in financial reporting, again, over the next 3 years. So earlier, budgeting and getting the budget certificate. This is accounting and getting the accounting certificate. Basically, you're producing minimum requirements for GAAP reporting. That is what the county has done for many years. We're adding to that to have an annual comprehensive financial report with an upfront section, then the same financial auditing that you're reporting, and then a statistical section. So consider getting that certificate over the next 3 years. Fourth section is reserves. There are several reserves: prior year general unappropriated balance. There's a reserve called the reserve fund, stabilization fund, capital improvements fund, and dedicated revenues. The policy is that the county commits to building and maintaining its reserve to provide flexibility in budgeting and to provide a funding source for financial stability, capital improvements, and extraordinary or unforeseen expenditures. And you've tapped some of these reserves in the past, roughly $600,000 to help subsidize the budget and balance the budget. So these reserves become an important item. The prior year general unappropriated balance is the remaining unrestricted funds from operations of the previous year. It's like the concept of free cash in Massachusetts municipals. It typically includes actual receipts in excess of revenue estimates and reversions of expenditures, appropriations that have not been spent. The county strives to use prior year general unappropriated balance on non-recurring one-time expenditures. What we're including in this policy is that the county accountant will prepare a certification of that amount to the county commissioners by August 15th. So it is a certain amount that you would approve in your normal course of business. And that reserve, going back to GFOA's best practices, should be about 16% of your operating budget. You can have a stabilization fund, and you do have a stabilization fund. That stabilization fund, as of the last fiscal year, is roughly $3.8 million, which is roughly 11% of your operating budget. We're saying that the stabilization fund should not exceed 20% of your operating budget. So you're sitting with a very good stabilization fund in terms of size, 3.8 million, that you can use again for one-time purposes. Number 5, capital. Matt's going to demo the capital for you after I finish the financial policies. The purpose of a capital planning and budgeting process is to keep that separate from the operating budget, to look at one-time capital purchases and fund that separately from operations, and to look at much larger projects like building improvements or new buildings or land acquisition and financing that, again, separate from the operating budget. If borrowing does occur, it could be short-term borrowing or long-term borrowing. If it's short-term borrowing, then interest on the borrowing becomes part of the operating budget. And if it's long-term borrowing, then the resulting debt service, principal and interest that matures each year becomes part of the operating budget in those years. So to create a sustainable capital plan, the county director, with support from the county facilities director, the chief procurement officer, the school business manager for school-related projects, and other participants need to consider all capital needs, assess fiscal capacity, plan for debt issuance, and understand the impact on reserves and operating budgets. The county shall develop the capital needs inventory over the summer months and shall compile the 5-year capital improvement plan by October 31. So that gives you over the summer and into the fall to develop the capital plan. The forecast should be completed by December 31. And then that sets you up for the operating budget that typically begins around February. It's important for the capital plan to be set so that those assumptions are ready for the financial forecast, and then those are ready for the operating budget. So the policies, the county will develop and adopt a capital planning policies that consider the county's organizational characteristics, including the services it provides. The sections include capital asset definition, capital project definition, capital planning process, capital budgeting process, and capital monitoring. And I'll be brief on capital because Matt is going to show you some demo, the capital plan and capital budget. So the process was to compile a 10-year inventory of capital needs and to build that into the capital planning tool to provide a 5-year capital improvement plan. So let's not get confused by the dates. We have 10 years of capital information, but we're really focusing on 5 years for the capital improvement plan. To fund that, debt service should not exceed 10% of the operating expenditures. Today, you're roughly 3%. So that's really good from how you have been managing debt in the past. The unappropriated general prior year balance, we talked about the goal of no more than 15%. The financial reserves that we spoke of earlier could help fund these one-time capital. And you do have the capability of a capital stabilization fund beyond the reserves that we have talked about. So a couple of highlights here. 5.3 for general, 5.3 is the definition of a capital asset. And there's two definitions, one for GAAP, one for the official financial statements, 15,000 or higher with an estimated useful life of more than 5 years. So that's GAAP. That's generally accepted accounting principles, and that's in your financial statements. And that's a national standard. But there's a difference between GAAP and budgeting. And for budgeting, capital items are a one-time purchase with a useful life greater than 1 year, such as furniture, computers, and vehicles. And this was a discussion point with the Finance Committee in July, and we've worked that into the policies. Again, policies were reviewed by the FinCom in July and going to the advisory board next month. We also changed suggesting that requests for capital items are to be submitted to the county director. So those items authorized for purchase can be budgeted as part of the annual capital budget alongside the annual operating budget. These capital items are not to be budgeted within department budgets and will be compiled under the county director's budget. So that's going to be a change if you adopt this policy, separating out from the operating budget capital items, which is what the FinCom did back in their review of those capital items. And this will be all under the county director's budget and not in other departmental budgets.
Excuse me, quick.
Yeah.
I noticed there's on the capital planning. So you had 5 years and you changed to 1 year. I'm sure it's a consultation. Was that a gap standard or a compromise or just local FinCom input? How'd that come about?
Well, we got 3 years.
Yeah.
We got a 10-year inventory of capital items.
Yep.
All built into the tool. Matt will talk about that later.
Yep.
Typically, you have a 5-year or 6-year capital improvement plan.
Makes sense. Yeah.
That's generally accepted in municipal and state and local government. So from the 10 years, we formulate a 5-year capital improvement plan.
Mhm.
From that, we picked the 1 year for the capital budget. You had the fiscal 22 budget before you. It went to FinCom. It went to the advisory board, and ultimately the commissioners approved the fiscal 22 capital plan, capital budget, sorry.
No, okay, maybe I'm sorry. I may have made it clearer. I'm saying in your definition of a capital item, if I'm reading this wrong, it's an item over $5,000 and it only has to be the useful life of only 1 year. Shouldn't it be something longer? That's what I'm saying. Where did you come up with the 1 rather than 5 or like to be a capital item?
Right, so for budgeting, we're looking at routine capital items. Let me give you an example. A computer.
Yeah.
One-time purchase.
Mhm.
My computers last about 3 years and then they die. So that's not 5 years. I'm gonna replace it in 3 years, but it's still a one-time purchase. Does that make sense?
Yeah, okay.
All right.
Thank you.
All right. Debt is section 6. And debt, again, is short-term and long-term. The policy, 6.2, the county's debt management policy exists to ensure high-quality debt management decisions, impose order, promote consistency, demonstrate a commitment to long-term financial planning, ensure the debt management decisions are viewed positively by the rating agencies, investment community, and taxpayers. Number one, you have a set of financial policies that is viewed very heavily by the rating agencies and is a key component in their bond rating. Massachusetts General Laws 35, Section 38, 37A regulate for the purposes for which the counties may incur debt, and you cannot incur long-term debt without state approval. So included in the debt section is the capital improvement plan, bond rating, debt guidelines, debt maturity schedules, debt strategies, and debt issuance. Number 7, financial forecasting. The policy of the county commits to conduct an annual financial forecast to facilitate long-range financial planning. And as Matt demonstrated to you, you pick a year and then it runs it for the next 5 years. So it's an annual exercise, but it has a 5-year look. And this section deals with budgetary control, revenue and expenditure guidelines, and financial forecast guidelines, all of which what Matt has showed you before. So if you look on the slide 28, you'll see that there's a sequence here, that the capital plan and budget to be completed by October 31, the forecast by December 31, and the annual budget process, which begins on February 1.
What tab that is, I lost.
That was on the
29,
PowerPoint.
page 29.
Page 29. Thank you.
Section 8 is indirect costs. Very simply, as part of the budget process, the county director will calculate the indirect costs of the general fund to the county operations and review the calculation with department heads until there's a mutual agreement on the results. The calculation will consider all related expenses to the county departments that provide administrative services to other entities. And you'll see on page 31 of the policies, these include health insurance, vehicle insurance, property insurance, Medicare tax, pensions, other post-employment benefits, administrative costs, and other costs that may be agreed to. Investments, section 9. Page 32. Other than OPEB, all of your monies are really aimed at, from investment purposes, liquidity. So this investment policy deals with liquidity. In other words, you want to have the cash available when you need that cash. The policy is the treasurer will invest funds in a manner that meets county daily operating cash flow requirements and conforms to state statutes governing public funds while also adhering to the prudent investment standards. The treasurer will manage all investments so as to achieve a fair market average return within the context of relevant statutes, safety, and liquidity constraints. Meaning, you get a monthly cash flow of revenues and expenditures. Then the treasurer needs to make sure that the investments are in the proper instruments to provide the liquidity the county needs to meet its cash flow needs. Grant management, section 10, page 35. The policy is that all departments are encouraged to solicit grant funding for projects and programs consistent with their stated objectives and county goals. All grant applications must receive pre-approval by the county director to ensure that all departments can meet the requirements of that grant, which may include, but not be limited to, having sufficient resources to meet in-kind requirements, having sufficient staff, or retention maintenance requirements. And you could see the policy on page 35 and some of the bullets that are under that. And lastly, vacation leave. Page 36, it's the policy of Norfolk County to grant employees vacation leave based on credible service. Vacation is available to employees who've been actively at work during some or all of the prior fiscal year. The amount of vacation an employee is eligible to accrue will be based on credible service and a formula that includes years of service. And the policy includes several bullets under eligibility requirements, vacation leave at separation, vacation carryover, and use of vacation time. And then you'll note on page 39, which is a signature block for the three commissioners, and a note that these policies were adopted on this date, whatever date, not today,
Michelle's got to look at it.
But as you go through the draft, we'd like to think you will adopt these as policies and sign off on that. And that completes two parts. And it's just after 2:00, so I'd like to get into our third section, which is capital planning
The 10.
processes and procedures.
Go ahead.
All right?
Glad you came early.
So we covered part of this in the policies, but I'll turn this over to Matt to give you a walkthrough of the capital planning process, how this was developed, how the 10 years of data were compiled, how the tool was built, and the reviews with the departments, and ultimately coming up with the 5-year plan and then the fiscal 22 capital budget.
Okay, thank you. So,
Is this in our binder?
yes,
Okay.
yes, it is.
Can you
We're
do a tab, maybe?
Sure. Yeah, well, we have the last of our slides talk about capital, but I'm going to, I'll just speak generally about it. We don't need to look at those slides.
Okay.
I will point you to the capital section of the binder, which I learned is different than my section, but it's probably towards the back because we did this in order.
Yeah.
Yep. So,
I got financials blue,
yep, so keep going.
maybe here. Yeah. Looks like it's here.
Yeah, it looks like this. Yep.
Yeah.
Yep.
Yeah.
So let's start here, and right before is a 3-page write-up, just like for the financial forecast.
Sure.
We have a 3-page write-up of the capital process. It talks directly about the process that was used to compile the 10 years worth of data, and then the process that was used to compile the FY22 capital budget. And we've met with you before, it was virtually at the time, but we've met with you before to present the capital budget for FY22, which you approved not too long ago. I forget the exact date off the top of my head. And today I'm going to talk a little bit about that also, but just generally about the process that was used to get where we are on the capital plan. And so I believe you've heard some of this before. So before we talk about these handouts, so the process that was used was there were eight departments that were identified by the county director at the time to compile capital plans for. And the way we went about that was we met directly with each of those 8 departments. We asked them to identify whatever capital needs they could think of, big or small, expensive, inexpensive, over a 10-year period. So we were focused at the time on FY22 through FY31. Looking out 10 years, I know that can be difficult to look out that far in the future. But we really tried to pick their brain so we could compile as much data as we possibly could during the time we had together. After we did that, we put together a first pass of a capital plan for each of the 8 departments, which is in an Excel format. We sent that off to each of the departments for feedback, for comments. Ultimately, we were able to finalize each of them with some feedback from the departments. And also, I should comment that we tried to compile what the capital item is the year in which it should be replaced or purchased or project started, and the estimated cost of the item, which also can be difficult to do, especially if you're looking at 6 years in the future. It'll be hard to know exactly what that cost might be, but we asked them to do their best to estimate. We were able to get most of that data. You'll see as we look at this shortly that we're still missing some of the estimated costs, but that can be filled in as time goes on. So once we had all that data, it was we finalized it. We put it into a very large Excel file, put all of the items, all the information that we gathered on one large tab in the Excel file, which really was meant as the place that the decision makers of the county would go to start to formulate a capital plan. So you have a list of all these capital needs or capital wishes that each of the departments have identified. It's unlikely that each of those items would be funded. So at some point, the decision makers would go through and they would start selecting the items that they may be funded as part of the capital plan to see what that might look like. That's where they would go. They would go on one central tab for the capital plan. And that is the process that we use to compile the FY22 budget. So you've seen this document before for sure. This group of about, I think it's 8 pages, shows you the FY22 capital budget. The first page, 2 pages are the summary by funding source, by department with funding sources identified as well on the first 2 pages. On pages 3 through 5, I believe. Yes. Our total numbers by department for each of the fiscal years that we worked on, just to give you a sense of what the financial impact might be of all of the all the items in the plan, knowing that it's unlikely that each would be funded. Pages 6 and 7 are what the items that were identified as part of the FY22 budget, capital budget.
Can I just weigh in very quickly?
Yeah, sure.
Chairman, through you, if I may.
Sure.
The FY22 capital budget has been distributed to the Norfolk County departments back in July. They're actively engaged in the projects that are represented in the product that Matt is showing that was approved by you, I believe, back in June, if I'm not mistaken. They will be providing quarterly updates to me so I can report back to you on how their progress is going against each of the identified projects. Just a brief update. Thank you.
And the last page of the FY22 were items that were identified as FY22 items that were not funded. And I believe you've seen that before as well. Now, on to something that you've yet to see, I believe. Once we started working with the current county director, we got some very valuable feedback on how to improve the tool, the capital plan tool. And the way that was to basically create a way to report on capital items that might look more like a capital plan that you could print out and physically look at in front of you. We didn't have a means to do that in the tool itself at the time. We just had a lot of data, basically. We couldn't present it really nicely. So we put together a way to do that. Basically, we added a reporting feature to the Excel tool. And what you see in front of you, which is the last piece of papers that are in your packet, I believe, is the results of that work.
Right.
So we now have a tool that can produce a capital plan for as many years as you want it to be. And the results of that is right in front of you. So we put together 5 years worth for this look, FY23 through FY27. It could be a 1-year look, it could be a 10-year look. But considering the county was very focused on a 5-year capital plan, we decided we would produce this as a 5-year look. So what this represents in front of you is not truly what will be funded over a 5-year period. We just took all of the items that are currently listed as to be purchased in each of those years and included it here, just so you could see what the tool is capable of doing. And you can see there are question marks identified in red as well. I spoke to that earlier. Those are items for which a cost has not yet been identified.
That's what those are, all those questions?
Yes, right, yes. So
Okay,
these are items that have been identified as capital needs,
yeah,
but those items do not have an estimated cost tied to them yet.
so a lot of them are the Aggie.
That may be correct.
Okay,
Yes, did you already notice that?
okay.
Yeah, so it's like a lot of them are.
Yeah.
Yep.
But understand, compiling this for all the departments over a 10-year period was a huge undertaking. Now we can be more rigorous, focus on the first 5 years, and develop more standardized forms, particularly for new items, and get these budget estimates more.
So you work from the outside in, you throw everything on there and then prioritize. Okay,
Exactly.
that's for the, and
Exactly.
because it's the first time we've done it this way, that accounts for the largeness.
That's right.
Okay.
I do want to mention that the budget was presented, the capital budget was presented to you back in March 31, to the Finance Committee on April 7, to the Advisory Board on April 14th, And the commissioners approved the 22 capital budget on June the 2nd. So yes, you've seen this before, but you haven't seen the whole 10-year and 5-year look before.
So if I'm hearing you right, in terms of your recommendation for capital, the state capital, you said we should have the capital budget that we want for the next year prepared by the end of December. Is that what you said? Or we should have our capital requests for like moving forward for by December? That way you separate it from the operating budget? Or did I misunderstand you?
That way it's separated from the operating budget.
Right,
B, any item to be funded by debt,
mhm,
the debt projections can be made, and any impact that either the capital purchases
mhm.
or the debt can then be put into the operating budget. That cycle begins February.
Okay. Not being contrary, on a local level, that's a little bit early. Most towns do it in January, February, but that's fine. I get it. I get it. But that would mean working backwards, we'd have to schedule, get our departments rolling in the fall to get it ready, you
Well,
know?
they are rolling, as John mentioned.
Yeah,
Yeah, it's a living document, so to
right,
speak.
that's true too.
John's gonna comment.
Just a sequence question, Mark, if I could, to Commissioner Steve's
Yeah.
point. The FY 22 capital budget is underway.
Right,
It will be funded with surplus funds from FY 21, which have yet to be dispersed, if you will, to the requisite fund to pay for a lot of these in FY 22.
okay,
Is the FY, do you expect, this is a sequence question, Mark.
right.
Do you expect the FY 23 capital budget to be prepared in 2022? Excuse me, in this October, or a year from October, once the surplus from FY 22 is realized?
That's what I was kind of getting at. That's all. Yeah,
So now we're in August.
right,
The fiscal 22 capital budget has been approved. The funding sources have been approved.
right.
The departments have received capital, these printouts. Departments can look at that, look at the 5-year, develop better budget estimates or first-time estimates,
Mhm,
the paint question marks.
right,
And then the fiscal 23 capital budget can be formulated over the next several months to
Okay.
inform
yeah, see,
debt service issues and capital purchases.
okay,
But the commissioners aren't going to vote that until later.
right. No, but that's just, I was
That's
getting the nuts and bolts. That's fine.
exactly the point, because I think I can develop it by October.
Yeah,
But the resources to fund whatever that is may not be recognized or realized until the third, likely the fourth quarter.
mhm,
And you're thinking that the development can occur in October, the approval can come later in the fiscal year, coterminous with the development of the fiscal year budget, the operating budget. Is that correct?
And don't forget the financial forecast. So yeah, we see a sequence here, capital budget by the fall, the forecast by the end of December. And then you have both tools available for you for the fiscal 23 budget, beginning typically February.
Because in some years, that capital budget, this is for the commissioner's benefit, that capital budget could be formulated in October, but undergo significant revisions
Right.
depending upon how revenues are trending.
I'm politely saying, it seems a little bit early, but you're the expert. That's why I was trying to get at why you established that date, that's all. I mean, in other entities, I've seen it where they assemble it and prepare it in the beginning of the new year, like January, February, and then, whatever. But I understand where you're going. That's all.
Yeah.
And it may have to be changed, it may have to be tweaked, but that means our department heads and others will be preparing things in the fall. With John, right, John?
Right.
That's what we're saying, yeah, all right.
Keep in mind, 3-4 years ago, you had another management letter comment that the county did not have an inventory of capital fixed assets. That was resolved.
Mm.
And further, we want to get that into what is called the general fixed asset account group on the general ledger. But that was the beginning of getting the capital, because now you had by department, a record of what the county owned for fixed assets. So you've come a long way in the last 3 or 4 years in this whole capital budgeting and programming process.
Good way to go. That's good.
To your point, Mr. Abrahams, if I could, through you, Mr. Chair, the gap asset exercise, while we do have, quote, assets in the can, and an exercise had been accomplished, I am exploring a software program that will be able to track electronically all of those assets, as well as their scheduled maintenance and repair. I recall speaking with you and Dave King about it, because I think it's pretty popular in the school world.
School board.
Yeah, and it is the backbone, I think, and it can be the electronic backbone of the annual gap asset exercise, rather than just doing it manually, like reinventing it every year. It need not be that hard.
Good.
Thank you, sir.
So, Mr. Chairman, if I can, I'd like to summarize.
Please do.
So I'm going to go to slide 39 of the PowerPoint and just a few comments here. So we've provided to you today the deliverables of A, the financial forecast, B, the financial policies, C, the capital plan and budget. These are what I consider firsts. It's the first set of financial policies, the first multi-year financial forecasting tool, and the first multi-year capital improvement program and budgeting tool. The county will need to take ownership of and continually update the capital and forecasting tools and the financial policies. You should develop and document the procedures and forms to support the policies to help get those policies implemented. And as you mentioned, the county should be more diligent in estimating its capital needs and develop additional procedures and forms to enhance its capital plan. And with that, we look forward to presenting our operational review and regional services report to you later next month.
Okay.
And we thank you for your time today.
This is amazing. And we're on time. Thank you. I'd like to just say one or two words. I don't want to hold these other people up if we could squeeze it in before 2:30. I welcome some of our department heads that are here. I introduced Mike, but I noticed Treasurer Bellatti's been with us the whole time. Joe Diori, our Assistant Treasurer, Michelle Lavadini, and Sheila Carroll from the Maintenance Department, as well as Nancy Rockwell, our purchasing agent. So they are some of the principals that are going to help us with all of this. I can't see. Am I missing? And Mark, who am I missing?
Robert Pearson, RSVP.
And I see Robert Pearson from RSBC, but I do not see his name. I'm sorry.
It's
right below the
yeah, it's below the big A. That's why.
Oh, I'm sorry, Robert. I can't see your name.
Making it high.
So that's good. They're here with us every week.
Yeah.
And what I'd like to do is take one item before 2:30, but I think it's number 7, which is public comment. I'm told that someone here had public comment. I didn't know it until we started. So I'm not hurrying you out the door, but
Good.
this is,
Good
again,
report. Lots of
an
thanks.
exciting day.
Great job, guys.
Yeah,
We're not
nice
going to
job.
release any of this until everything is done.
Yeah.
And then we're going to have an aggressive program, hopefully, by implementation.
What's our best, really quick, Mr. Chairman? If we have questions on things, how do you want to proceed? Go through Director Cronin? And then
I would say so
Okay.
until
You don't
we're in
need
the
to
draft
expect it, right?
stages, which we're in.
a couple of things I took notes on.
All right. I mean, we're in regular session
Yeah,
here, so
good.
I'm, with your indulgence, I'm going to go
Sure.
to number 7, which is a public comment section.
Thank
And
you,
then
Mr.
we're
Chairman.
going to
Thanks, guys.
recess for the
Thank
school board meeting at 2:30.
Right, sounds good. All right.
Any
Let's go,
public comment?
Mr. Chairman.
Madam Chairman, with your indulgence, we've received some documentation from a neighbor here in Dedham. I'll circulate her letter to your attention. Obviously, no action today. The neighbor is calling attention to some traffic issues. associated
Okay, traffic issues seem to be on the table the last month or so, and we are going to look at it all.
You have a letter from Carla already, Joe. I'll give it to you. It is same copy of. We'll start with you.
This just came in?
She delivered these today. This one.
Oh,
I thought we were going to take these people and speak in session here before they have to sit to the school.
That's fine. That's fine. We can do that right after this.
Okay,
So in this public matter, I'm just delivering to her message
Okay.
regarding public parking from the town of Dedham. which is under consideration, as you know, from a previous discussion. At the back of the registry building, the resident is calling attention to some traffic flow matters and some history that she reflects on. She's provided some photos for your consideration of how traffic flows, so it's informative for your needs and potential future action.
And this letter is from Carla M. Foley of Old River Place, who is our neighbor right here, right behind the district court and right between both of our parking lots. So she's very knowledgeable and pays good attention. Okay,
Thank you, Commissioner.
under open session, we have someone here who has some public comment. I'd like to do it because I don't want to keep them through the school committee meeting, not that they can't stay if they don't want to. I mean, they can stay if they want to, but I doubt it. Go ahead.
Thank you, Commissioner Shea. To Commissioner Shea, Collins, and Stady, this is Liam McGahey on behalf of the APSMA Union, Local 2417. My name is Chris Stoffney, and I will be interpreting. In regard to Register O'Donnell's letter, let me just put on my glasses first. Hold on. Not as young as I used to be. In regard to Register O'Donnell's letter to the commissioners dated 8/5/2021, we, the union, need to make sure that all of our positions, including the registry and the maintenance positions, are filled promptly and permanently without any delays. It is still under the fiscal year 2020 budget, which was approved and funded. The maintenance positions are 100% funded by the state as well. Now that we are in the midst of a Delta COVID spike, as well as winter approach, we need to make sure that the registry and the maintenance are fully staffed. The registry needs to help keep up the high volume of documents in order to provide COVID services to all its constituents to Norfolk County, as well as keeping the workplace and the buildings cleaned and disinfected on a daily basis. Just a reminder, our position was designated by Governor Baker as essential personnel providing essential services. Maintenance is needed to keep up with all the demand orders all around Norfolk County. Once again, I just want to give you a gentle reminder. We understood the Abrams Group is here to help improve all of Norfolk County and its towns with their operations. We were reminded that our jobs would not be affected. That being said, any upcoming appointments and promotions need to be approved without any delays. These union positions are necessary to the daily operations of Norfolk County Registry of Deeds. Without these appointments and promotions, our job performance will be affected. We need them to keep the registry operating smoothly, effectively, efficiently, and disinfected. I thank you for listening.
Thank you very much, Leah.
And then I also, if I may, just
You're going to
one
leave a
last thing.
copy of that with us?
I can.
We can take it under advisement. What, Commissioners, any comments here?
Well, throughout the COVID, you did a yeoman's job, obviously,
Thank you.
working very hard, and we recognize that. And we want to continue that good working relationship. You do understand we're undergoing a report.
I
The
understand.
consultant didn't even touch upon consolidation today, and we've still got that to go. And we've had our respectful differences with Mr. O'Donnell, who we admire and respect, but we certainly want to make sure we can support you every way we can.
Right.
And our buildings, we intend to keep them clean and operating and fight through it. So
Right. We
let's
just
hope for
wanted
the
to make
best.
sure that our voice is
I
heard.
understood.
And if I
appreciate
can
that.
just touch base for one other point, this is just for, once again, speaking for Lee McGee,
Sure.
this time as a Norfolk citizen through myself.
Yep.
I want to thank you for your efforts of posting meeting minutes on the website. It's greatly appreciated. I noticed that the videotape from last week's commissioners meeting dated 8/4/2021 haven't been uploaded and posted. Is there a reason for that? It would be helpful if you could keep up posting the videos. It is public access for all citizens to hear the Norfolk County happenings in their own time, especially for me with my hearing loss. I was happy to learn that I was able to view with captions to understand what has been happening. That is the best access I could get at this time. See that the Abrams report today is in today's agenda. We will have access to a hard copy of it for the public to read and wear. I appreciate your effort. On a side note, I am looking forward to seeing the renovation of the court dome. Looks like it's going to be beautiful, and that's
Hope so.
the completion.
Let's hope so. Yep.
And
I don't know what happened to that recording. We have to,
Last week's
yeah,
meeting?
last week, it wasn't put up on the web yet.
I don't believe it's been accepted yet, is it?
Maybe.
Is that the answer?
Maybe that's why.
It is, it will be put up.
It will
Okay.
get there.
Yeah, it's
But
under
we have-
construction.
We had a busy week last
Yeah,
week.
exactly.
No, we had
That's all
three, we had three different meetings. No, we were interviewing CPAs. We had a multi-county meeting. We had a lot going on, so, but I'm sure we'll get to it. We will. You know,
Once again, thank you very much. Appreciate it.
Sorry you had to wait so long, but now you can see some work in progress, what we're doing, Leah.
Very
Okay.
interesting, fascinating. Glad I had a chance to sit in on
Yeah.
this. Thank you.
it is. It's a great days ahead for us.
Director
Mr. Chairman, through you, to the question that the gentleman asked, will the report by the Abrahams Group be available publicly? Unless there's any opposition from the commissioners, I'd like your permission to post it on our website without delay.
The draft copy.
The draft copy?
Everything that's here is draft until you accept it, yes.
So you want to post it before we accept it?
Sure, it's a public document at this point, it's
All right,
draft,
but
it's got a
It
watermark
must say
on it.
draft.
But please, yeah, I hope people understand. It's a draft. We haven't, like I have
Right.
questions still, and all of us do. So, you know.
As long as we know we're dealing with a draft.
Don't be jumping on conclusions. Yeah.
Absolutely. I understand that. Thank you for that. I appreciate it.
Yeah.
Well, we made a giant step forward today
Yes.
because
This was great. I actually learned a lot. That was good. Yeah,
it's
things we
coming
can do.
together.
You know.
Okay.
Can I change my seat back over
You
there?
can take your seat back
Okay.
and we're going to
Good to see
be,
you.
if I can have a motion to be the regular agenda in recess, and we're going to have
Oh,
a
good.
meeting of the school board of
School board,
trustees
right, okay.
as soon as Chairman Little comes through the door.
Excellent. Good. I'm gonna
Thank you.
take advantage of that.
I'll leave this for Ed.
Do you want to do a recess right now, Joe?
Are we in recess?
Yeah.
Yeah, we're in recess.
We're
Yeah.
Pending Ed Little coming through the door, and he's going to sit right here.
Reasonable.
All right.
Thank you very much. The regular meeting of the Norfolk County Board of County Commissioners is back in session at 3:45 for the remainder of the agenda. By way of management, we've done items 1 and 2. We did item 7, public comment, and we did item 14, which was a lengthy report from the Abrahams Group. So I'm now going to go back to the agenda, Commissioners, starting with item number 3 and 4, which are related, not related, but similar, and I have a request to table both of them.
All right.
But number 3 is open minutes of the approval of the minutes, of the open session, July 28th for approval.
And a motion to table.
Thank you. Seconded, all in favor?
All right.
It's tabled. Number 4 is minutes of the executive session of July 21st for approval.
Thank you.
Look at the table there too.
Aye, motion to table.
Second.
All in favor? Aye.
Aye.
Thank you. Number 5. The regular minutes are ready to go.
Okay, I'll make a motion to approve the open session meeting minutes of August 3rd, 2021 for approval.
Second.
All in favor?
Aye.
Number 6.
I'll make a motion, we approve the minutes for the open session meeting of August 4th, 2021.
Second.
All in favor?
All right.
It is a vote. Number 7, we did earlier. We heard from Leah McGahey of the Registry of Deeds. We took her letter under advisement. Number 8, we have no appointments today. We took care of the Abrams Group. Number 9, old business. I don't see any old business, Director Cronin. Number 10, personnel matters for consideration. We have 4 or 5. We have 2 at the school, 1 at the registry, and the 1 in Wallaston is a repetition. It's not going to be.
Mr. Chairman, I've moved it.
Actually, the one at Wollaston, I don't know if Michelle's available, Bill, we could touch base with Michelle. But the one for Wollaston was incorrect. It should have been another person.
Oh,
Because this is a person we voted on 2 weeks ago. It was on the agenda last week. We didn't vote it on last week.
Michelle has indicated this item for this week will be withdrawn.
Okay, so this will be withdrawn and
we
corrected.
have nothing
corrected-
for Wallaston Recreation.
Trying to be corrected next
Correct.
week.
So Walston stricken.
Okay, 2 for the school and 1 for the
Okay.
registry. Dick, if you.
Yep, sure.
One for Wallaston this week.
Okay, great. Thank you.
Okay, thank you. I move, Mr. Chairman, the name change from Barbara Desai to Barbara Wright of Medford, Mass, effective 7/20/21.
Second.
All in favor?
Aye.
It is a vote.
I'd move the notice of contingent appointment for Christopher Gill of Norton as a temporary custodian at the rate stated effective 8/9/21. So
Second.
moved.
Wait,
All in favor?
wait.
Whoop,
May I make a
under
remark?
discussion.
This
Director
particular
Cronin.
appointment is a correction to the same appointment you made a week ago.
That's all
The
right.
Right.
blue paperwork
forgot
came
to
over
say
as permanent,
temporary.
and this is a correction to temporary as
Okay.
intended for all facility maintenance people. Thank you,
But
sir.
we had, that's right. I thought so. I recognize the name.
Okay.
All right, registry of deeds, notice of appointment.
A motion been made and seconded.
Oh,
All in favor of
Aye.
temporary custodian Christopher Gill? Aye.
okay.
It is a vote.
Sorry.
Registry of Deeds.
Right, notice of appointment of Decima Bunel of Medway as senior clerk at the registry of deeds effective 8/12/21 for the rate of pay stated.
Second.
All in favor?
Now, is
It is
this
a
a
vote. Thank you.
temporary appointment? We need to state
She's
that?
permanent. No, she's not part of the Abraham's technology or
Okay.
facility maintenance
All right.
scope.
I vote a yes on that, Mr. Chairman. All
All
right.
right, the number,
And Wallaston is withdrawn, right?
Lawson withdrawn.
Okay,
Up to 11, we already did.
all right. We
You
did?
want to list the payroll and expense?
Oh, yeah, I thought we already did. Okay.
it's right there.
Motion to approve the following county weekly payroll 22-6, the amount of $139,626.39. Want to do them all together?
Yeah, do them all
Sure, why
together.
not? Motion to approve the Aggie weekly payroll 22-6 parentheses 3 in the amount of $192,471.19. Motion to approve the Aggie weekly payroll 22-6 parentheses 3.1 close parentheses in the amount of $210,630.34. Motion to approve the Aggie school bond anticipation note in the amount of $150,725. And motion to approve the county expense warrant for August 3rd, 21 in the amount of $69,824.66. So moved.
Second.
All in favor?
Aye.
That is a vote. Thank you.
Okay.
Number 13, legislative consultant contract for 1 year period with 2 1-year options to renew for the Norfolk County Registry of Deeds. We opened this bid 2 weeks ago, and local, one bidder was the Carroll Group, Karol Group. And the due diligence has been done, and Nancy just given me the contract. It's ready to go. Commissioners, if you have any comment.
Well, I didn't know if the county director had any input on it.
This particular item, thank you to Commissioner, this particular item is funded in the FY '22 budget, so relative to the financial impact, it's covered by the Registry of Deeds. It does have options for extension, which I think will be evaluated like every other contract when we plan the out year budget, including FY '23 and beyond. So at this time, I have no concerns about this. Sir.
Motion to approve the contract as presented.
Second.
All in favor of awarding the
Carol Group.
legislative consultant contract to the Carroll Group, Karol? All in favor?
Aye.
It is a vote. Thank you very much. Next item,
14 was the Abraham Group. We already did that.
14 Abraham's Group is completed for today. We're going to take number 16. We're going to get to the report of the county director before the opera meeting.
Thank you, Mr. Chairman. Very briefly, I wanted to alert folks that the Stoughton District Court, which was due to receive some rooftop unit work, has currently been paused while we evaluate the condition of the roof itself to hold the 2 units. In a meeting last month held with the contractor engineer to review the matter, consequences appear to be that the cost to cure the structural integrity needed to support the units exceeds the available balance of this contract, and indeed exceeds the amount permissible to move forward without an additional bid. We have some concerns about some steps taken to prepare the project, and so consequently I've reached out to another firm. We are busy trying to secure the services of a firm to provide a peer review of the engineering services done on this project. Following that review, we'll assess the next steps, which may include the rebidding of the project. I've drafted a letter to the Honorable Justice O'Malley for your review and consideration upon signature on the peer review contract. I'll alert the judge, the clerk magistrate, and the district attorney of the condition of the court project. Overall, I'm sure you're all concerned, when will it be done? If everything goes according to plan, we will have the rooftop units in place before winter sets in sometime this fall. But this project has had some twists and turns, first associated with the delivery of the products, which were delayed due to COVID supply stream issues. And then certainly following that, the challenges involving the structural issues on the 2 units. So we're working towards a solution. It may take some more time before the problem is resolved. We are busy trying to wrap up the last few elements of our audit for FY20. We spoke with Grady last week. He provided a knock list of areas that we needed to still provide information on. The register had 2 areas. Marguerite Lee promptly turned around and gave me those pieces yesterday, and I sent them over to Grady. I think there are 2 more pieces, and then he will have what he needs to complete that audit. It's important that we try to resolve the audit by the end of August or September, so that the audit can then be concluded and made available to our bond rating agencies associated with creating the bonding for our bond anticipatory note for the schools. So we're on a tight schedule. I think we can do it, but we're working diligently towards that. The last item, a little bit of good news. Dale Kurtz, who is our veteran service officer, as you know, has told us of his intention to retire at the end of August, I believe it's the 27th. We've made attempts to sound out interest from Franklin and Avon, and they appeared to date to be null. However, this past week, Dale notified me that Avon is interested in hiring him part-time for a sum of money, and the funds would then be sent to Norfolk County to offset a portion of his salary here. He's looking at a salary very modest to cover the services in Avon and the floater services that he might be able to provide in other Norfolk communities as they experience vacancies down the road. It's a very creative application. It still keeps Norfolk County in the
It
green.
still gives us a VSO. Should someone,
Gives us a VSO.
I did not.
Not just the
It's a great
VSO,
deal.
but I would argue one of the best, actually. It's
Yeah,
really good.
We
what it
endorse
does.
it.
that's great.
And it gives him a little bit more flexible schedule to enjoy his retirement with. So I'll be bringing forward the contract associated with that as soon as I review it. He just sent it to me last night, but I'm very encouraged to hear this. And I did receive a brief email from Greg Enos in Avon confirming interest. So it appears all parties are there. We just have to dot some i's, cross some t's. That is all, Mr. Chairman. Thank you for your time.
Okay,
Great
thank you.
news. Great to have Dale back in some way, right?
Oh, he's great.
Yeah.
Emergency items, I have none. We're gonna go now to the upper report, which will include,
17.
if we so choose, a
Should
vote
they
to
report
select
it?
the CPA firm. And I'm gonna call on Director Cronin for the opera.
Thank you. One moment. Can I ask a question?
Yeah.
What were you going to ask?
Should they report it? Because I've seen budget from day.
Yes, we'll bring this up on the next time. Okay, Paul. So regarding the American Rescue Plan Act, there's been activity in the last week. I think we reported that we had interviewed 4 firms last Tuesday for consideration of performing CPA duties to create a portal, manage the applications and the reporting associated with the federal treasury's tracking of grant funds. I will yield to you, gentlemen, to share your thoughts on that meeting this afternoon. It's my hope that after concluding some dialogue, you may be inclined to take a vote on which firm or firms you're interested in. If I may take the opportunity to share with you the need for a choice of 2 firms. The concept initially is that the primary CPA firm would perform the duties that I just expressed. That is to develop a portal. The portal is an online tool that allows cities and towns to gain access to an application, the resources of the grant, and some frequently asked questions and other tools that allow them to be efficient and thoughtful with their grants. The portal will then provide what we call a primary or first level compliance review. So the primary CPA will perform that compliance review. There's a secondary review that happens after that. And through best practices, it's desired that a separate CPA firm be in place to do this. So this afternoon, I would ask for your consideration of a second firm to perform what we're referring to as the secondary compliance review of the ARPA applications. Just to be clear, The secondary compliance CPA firm would not be responsible for developing a software portal. That's the first primary CPA firm's job. But we do believe having two levels is not only efficient, but wise financial strategies to firm up the applications as they head to the U.S. Treasury for approval. So with your indulgence, Mr. Chairman, I would yield to you and your colleagues to discuss the terms of the four firms that we saw last week and the consensus on which firms you want to choose, one for primary, one for secondary. Thank you, sir.
I'm going to open it up to my fellow commissioners. I do have a point or two at the end, but I hope we can resolve this today based on our meeting last Thursday with the three counties. It made it clear there. There's a time frame here where we're still ahead of it.
Well, first question, if I could, to you,
Sure.
Mr. Chairman. Well, I received and obtained information on the rates or compensation on 3 of the 4 groups. I did not get information on the group called Powers and Sullivan, so I have no idea what their charge would be, which puts me at a slight disadvantage. I did get the rates proposed by 3 of the firms, but not his. The second question I have is, what's the length of the contract would be entered into? In other words, could we do it as a 1 year and evaluate it? And then if we feel we're happy, keep going. If we're not, we could change. Those are my questions.
That's a great question, and I believe the answer is yes. We can devise a contract with any firm with a minimum of 1 year with options to renew if that's desired.
Okay. I would lean towards that if we could. I thought all 4 firms were very good. I took time to review the interviews again. I made some notes. I looked at it in terms of Ernst & Young, Powers, and Chris Larson was my top 3. Those were the 3 I looked at for pricing and for experience. Clifton Larson, of course, is the one who did the work already with Plymouth County.
Correct.
So they've got the experience, which you're saying is don't reinvent the wheel. I liked them a great deal for that reason. And I kind of like Ernst & Young because of the fact they just seem very creative. They had some creative ideas in terms of analytics and in terms of developing information and utilizing it moving forward. I don't know where they would be in terms of, like, are we supposed to vote? Is the first group going to be the first one and the second one's the audit as you described it?
Correct.
So we're not just picking 2 firms and then sorting it out. So whoever gets the first call is the first one.
Is the
develop
primary.
portal. Okay. All right. I mean, I'm troubled by the third, my third choice seemed like a very solid audit company. They did a lot of audits. I just don't know if rate of pay. There's no compensation. So that was
So-
another thing I didn't
So
have.
briefly, if I may, Mr. Chairman,
Sure.
the rates that Commissioner Stady is referring to were made available to him through the state website. All 3 major firms, Ernst & Young, Clifton Larson, and KPMG, have rates that appear on the state contract. One of the things that we did with this exercise is I treated this in my training as a request for information. It is designed to bring the vendors close to you so that you can ask questions about the goods or services they're selling you, and you can evaluate whether or not you're in the right market, you're asking the right questions, you're positioned to buy something. In this case, there was no intent to ask the vendors directly for bid prices because this is an exempt 30B contract cycle. So when you select the firm you're interested in, we will engage them in a negotiation. For the individuals that are on state contract, you may negotiate with them, Commissioner, from the rate that's established. You can go up, you can go down.
Okay.
And so the dynamic for me is still a negotiating position.
Mhm.
The 4th firm is not on state contract. That's why we didn't get rates from them. But the rates are publicly available. I understand through their interview with us, they perform public audits of many communities across the state. So the rates are well known and easily attainable if that's a firm you're interested in going for. Again, at that point, if you choose them for any level, we engage them. We'll negotiate directly against their publicly available rate sheet.
The other thing I looked at, to be honest, Mr. Chairman, I know that they'll work for us. We know that. But I think John, our director, will be working more closely with them. And I
Hopefully.
want to feel that the choice we make is someone he's comfortable with as well. So I would like to hear, I know you don't have a vote, but I would certainly like to hear your thoughts on how you felt about the interviews and the candidates.
Well, thank you for the opportunity to express my opinion. it was interesting following the meeting. I think there was no consensus. People saw different things in all four vendors, and I think that gave me the judgment that it was very much worth the exercise to explore what each firm can offer us. So I was excited after seeing them. Personally, my view was I was interested going into this with a firm that had a tool that was readily available, that we wouldn't have to wait months, weeks for them to develop and make available then for us to engage. Our customers are waiting for this money. We know in large part that many of the communities have projects lined up that are shovel ready. We ought to be thinking about the path of least resistance. And I think you said the same thing, Commissioner Stady. Don't reinvent the wheel. So firms that had a leg up were the ones that seemed to have a tool. Ernst & Young had a tool. I was very enamored with the EY Accelerator, the data analytics that can be drawn from the information that the portal collects. And also like Clifton Larson, I thought their presentation was clean, neat, and it reflected their experience that we know about in Plymouth County handling the CARES Act. KPMG was professional. They seemed very well staffed and lots of resources. And I agree, Powers and Sullivan had a lot of passion and energy behind what they would like to do for us, but I think they fell a little bit short of competing with the firms that had the resources to give us the tool, the primary tool to do what we need to do. So in my impression, I would probably place Ernst & Young and Clifton Larson in the upper tier. I would place Powers and Young, Sullivan as more of a compliance audit firm, perhaps in that second slot that we've been talking about, that they seem to have strong community experience with. So
That's more.
essentially, that's my.
And that's what I was trying to, and now, again, price-wise, for what it's worth, Ernst & Young seemed to be the most affordable. Maybe that's not a key factor, but based on the state rate, whereas KPMG they had some pretty good rates there. But again, depending if you get the partner or the associate.
And again, those are
you know,
open for
yeah.
negotiation too.
Right, I understand that. I'd be okay, Mr. Chairman, going with Clifton Larson or Ernst & Young as our primary. I mean, I was fascinated. Ernst & Young just seemed to have some very creative weapons, especially was it Amy? I can't even remember her last name.
Amy stood out.
It was just super. And I think the only thing that I'm concerned about, it's just a fair question, is that Clifton Larson is already working for a county. And again, can we be assured that we're going to get the full attention that we want? Whereas I don't think Ernst & Young is doing it yet for anybody, are they?
They are. They have other clients across the country.
Okay.
That's why the EY Accelerator is in place.
Mhm.
But I think if I could, Mr. Chairman,
Sure.
maybe add on a little bit to my remarks. There is a value to Norfolk County to consider the position that Plymouth County has built out here. We've heard it from our tri-board meetings with them, that they are very, very interested in working with other counties in Massachusetts to bundle the costs associated with running this program.
Mhm.
I don't speak for you. You speak for yourselves, but I believe the intention is to flow the money, the $137 million, back to the cities and towns. To that end, there will be some administrative costs associated with running this program. We're going to minimize those. We are much more strongly positioned to manage those dollars and resources by sharing the costs of running this program. If we're able, through your vote and consideration, to join in the Plymouth County model, we do achieve great scale. I mean, tremendous scale. You could easily imagine a total cost of X dollars being divided by 3, or perhaps more, as we've learned. Barnstable may be interested in the program as
And
well.
Dukes.
And Dukes, right. And those scales really start to matter when you're talking about
Mhm.
multiple levels of compliance
Mhm.
and down the road, legal compliance, which is another vote that we'll probably have to take down the road.
Right.
So if we go it alone, that's one option. That's your vote.
Yeah.
But there's also this economic factor. And the economic factor is real. Consider if we decide to share resources with other counties, we're really optimizing the dollars and the values to the communities in Norfolk County.
I'm set to make a motion.
I feel basically that any of the four were fine. I learned a lot from me, and, I don't travel with larger CPA firms, Person who does my taxes is the guy down the corner, et cetera.
Yeah.
So that's
Yeah.
fine. But I learned a lot there was something good about all of them, and I don't think you could go wrong with any of them. I earlier approaching all this, I wanted to be independent, but I'm pretty much sold on the concept of the three counties trying to do this together because of economy of scales and because the Plymouth had been down the road, which turned out originally to be a questionable decision that they made, and we didn't make the same decision. The famous phone call that Commissioner Collins was involved in turns out to be, I think, eye-opening, and I think it's made Plymouth the kind of the leader. It just turned out that way because they've been through similar circumstances.
Yeah.
There's no question. I was very apprehensive in the beginning. Then we were trying to hire a director. We had the director. I think the very first real conversation I had with him after we hired him is, can you really look at this opera and tell me what, this is a big deal. I mean, administrative wise, it's bigger than anything recently in Norfolk County ever did. And we all talked about it. We're back and forth. So now I've gone from being independent to, I like the concept of the three, and if it's more. And Treasurer O'Brien has been very persuasive, and his leadership has been excellent in this. The second one,
I'm not trying to be contrary. I thought he said at the joint meeting, maybe there's an advantage in not all of us having the same resources. Did he say that? Or did I hear him wrong?
oh, I don't think so, unless
All right. We were going through a dialogue, and I thought
he was impressed upon me to get them both done as soon as possible, because there's some minor reporting needs to be done at the end of August. It's about July activity, we found out, but
Right.
they're supposed to do it, so.
Yeah.
And,
I think they were-
and I like the localness of Powers and Sullivan, so that's what made me think of them for the secondary audit firm,
Yeah.
because.
Yeah.
And I asked Plymouth and if they had voted, if they have worked with them, and in fact they have, because Powers and Sullivan represents the Plymouth Retirement Board, and they have other counties in Plymouth, they have other towns in the county of Plymouth, and they have 10 cities and towns in Norfolk County. So that was appealing to me, but I could work with any of them, but I'm convinced Clifton Lawson should be the primary one, and I think that Powers and Sullivan would be a good choice for the secondary. Again, if it's reviewable every year, I don't know anything about price. I assume Tom has negotiated a price already in his side, and he's made representations that why go reinvent the wheel, and I believe him.
Well, to be clear, any contract will be with us.
Right, I know that.
There's
I know
no,
that. So we'll look at it again.
We currently do not envision any memorandum of understanding with Plymouth County or any other county
Right.
to collaborate. What we would enjoy if we went with the tri-county, multi-county model would be the benefit of the sunk costs that would come our way. We'd inherit a program that's already built, but we own the contract. The vendor works for us.
Yeah.
So not a.
No, I understood that. I'm
They're our
sorry.
client.
Clifton Larson, where are they from?
I don't know off the top of my head. I believe, I want to say Rhode Island, but I might be wrong.
Okay. Did they leave anything
Yes,
last week?
they did.
They did?
We have material, and I'll be happy
Okay.
to share when you come up. Yep.
I know they have an office in Lexington and an office in Quincy.
Oh, okay.
And that's where Chris works out of.
Okay.
Um,
I'm fine. Yeah, I really just, I thought you said they were. all
I
good.
think we're gonna have to go down the road on law firms quickly,
Yeah,
but the accountant is the first one they need to get going on.
yeah.
So I'd like to get done today, promise, and we're not meeting next week, so. Each week we're edging closer, so we're at the point of no return. And I'm excited. I mean,
Yeah.
I actually, I had a call from Mayor Braintree this week and last week, and yesterday I had to see Mayor Coke in Quincy for something else, and for the first time he was joking me about, he said, "Oh, I thought you were here with a check," but before he just said, "Yeah, we'll get to you, we'll get to it." So, and I told him, well,
Yeah.
we're all three agreeing on accountant and this and that, and it's pretty much ready to go.
Right.
He spoke very highly of Powers and Sullivan to me also, but I didn't tell him. I told him everyone did a good job. I didn't tell him where we were because I wasn't quite sure yesterday. But if you have no fears today, let's get this out of the way and have the director put something together for each one of them since it's on us, and then I can almost guess that we're gonna be looking at law firms right away too.
Do you want to read the motion, Dick, or you want me to do it?
You can, Peter, please.
I'd like to make a motion to authorize the county director to enter into negotiations on behalf of the Norfolk County Commissioners with the firm Clifton Larson Allen LLC for primary certified public accounting services relative to the development of a distribution and compliance program developed by Plymouth County in conjunction with other Massachusetts counties for the American Rescue Plan Act federal funds.
I'll second that motion.
All in favor of the motion to appoint Clifton Larson as the primary certified public accountants for our American Rescue Plan Fund, federal funds?
Aye.
Aye.
That is unanimous. Thank you.
I'll make a second motion to authorize the county director to enter into contract negotiations on behalf of the Norfolk County Commissioners with the firm Powers and Sullivan LLC for secondary certified public accounting services in conjunction with other Massachusetts counties for reporting and distribution compliance relative to the American Rescue Plan Act federal funds.
Second motion.
All in favor?
Aye.
It is a vote. Thank you very much. After the fact, I assume we'll forward this to everyone, the proper people, and probably give a call to Treasurer O'Brien, and then if you can do the negotiating, John, we'll go to the next level. Thank you very much.
Thank you, sir.
I don't have any emergency items or topics that did not reasonably anticipate. Do you have another one?
Just very briefly,
Yes.
the commissioner, through you, Mr. Chairman, HBO, through a prior vote, wished to have the lot behind the courthouse on August 17th. They've changed their intentions to August 18th.
The opposite.
Big pardon?
The opposite of that.
Big pardon, 18th. They wish to have the 17th. Thank you, Bill. So I'd, through you, I'd like to ask for a motion to alter the vote for the HBO services to use the back lot on August 17th.
So moved,
2021.
Mr. Chairman. I move that.
Second.
All in favor?
Aye.
Aye.
Thank you.
Mr. Chairman.
I have nothing else. This was a very good meeting.
Motion to adjourn.
This equals 2 meetings over.
It's all right.
You know what I mean? This, the next
It all
week,
evens out.
you know, it all evens out, right?
Abrams Group,
Right, that was terrific. All right,
this meeting, all in favor of adjournment?
all right.
Aye.
This meeting is adjourned at 4:16 PM. Thank you very much.
Really.
Am I wrong or?
So our next meeting will actually be the Monday.